Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Wednesday, April 10th, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the charts. So, big picture. This is a weekly bar chart that goes back several years, but I'm really sort of highlighting this channel structure that we've been inside of now for over a half a year. 239.29 is a descending channel top that we did test the last week of December. And while we were testing it, we'd mentioned how you should allow for a full bearish rotation back to channel support within 3 to 5 months or sooner. Took about 2 months. We tested it about 2.5, 3 months ago, and we've been testing it repeatedly for the last couple of months. In fact, it was even about a month ago that we did also close below it by the required 1% margin. That red line is the 1% zone. We closed below that red line by a hair, only to see the following Monday gap right back above that channel support, and it's been holding well ever since. And so holding above 159.91, you can allow for, once again, full bullish rotation to channel resistance at 239.21 over the next 3 to 5 months or sooner. That sooner would come with a settlement above this area, 184.25 to 188.84. Now, if you look upper right, you see we have 190.24, and that is because on the daily chart, that same formation at 188.84 comes in at 190.24. So we've been telling you that you can buy channel support that is presently at 160.82 on the daily chart, 159.91 on the weekly chart, in anticipation of 2 to 3, 3 to 5 weeks recovery into the upper 180s, low 190s. The weekly chart shows it well here, 184.25 to 188.84. And you can see the daily chart is 190.24. And here's another daily chart, 184.25 to 190.24. That pretty much sums it up. This area narrowing daily, now in reach over the next few days following yesterday's settlement above, among other things, the 173.30 channel top. Now, we had an extreme one coming down that we also settled above yesterday, but to give the market room to breathe, 173.30 is your bottom picking area for the day and the next few days. I do think possibly today, I'm going to say by Friday's close at the latest, but possibly today, 184.25 in reach. On the way up, we do have 179.83. That is the high settlement price that was put out a couple of weeks ago. We came close to testing that actually on Tuesday. 179.22 was the high. 179.83 can contain intraday buying pressures, and below which we can back off to 173.30 on an intraday basis, where a buy opportunity presents for day traders, and I'll even say 3 to 5 day swing traders. But I don't think it's going to take 3 to 5 days to reach our 2 to 3 week objective at 184.25. I say 2 to 3 week objective because, once again, holding above this channel support on the daily chart at 160.82 does maintain the 184.25 to 190.24 region as a 2 to 3 week target. And now that we closed above it on Tuesday, the 173.30 formation, 184.25 in reach possibly today. Pushing or opening today above 179.83 will actually allow 184.25 today. 184.25. If you got long, over the last week, over the last few weeks, as we've been testing the 160.82 long-term support level, which once again on the weekly chart is shown here at 159.91. If you've been bottom picking that area, holding out as a 2 to 3 week possibility, the mid to upper 180s. This is your zone to exit, take profits. 184.25, the beginning of a range up to 190.24, where you can unload that long position and take full profits if your time horizon is typically 2 to 3 weeks out. You can also play the short side in beginning at 184.25 and ending at 190.24. From here, we can top out through the rest of April, fall back again within 2 to 3 weeks into the low 160s, upper 150s. That is the possibility here as we continue, into May trade. We can top out in the mid to upper 180s, low 190s on the daily chart, and then this could actually form a good high through April, and from here we can fall away. But once again, just remind you that we have channel support that we've tested a lot over the last 3 months, and above which channel resistance at 239.21 should be considered attainable over the next 3 to 5 months. And if we were to close, say, Friday above 188.84, and I suspect this 190.24 channel top will be at 188.84 on Friday, if we close above this area, I do anticipate then that 239.21 channel top within about 2 to 3 months. So that is your next solid go with buy signal on strength, talking to 3 to 5 week out to 2 to 3 month position traders. But once again, if we fall back into the upper 150s, you can do the same. I've been mentioning, as we've been testing this 159.91 formation, that you might consider reaching for 235, 240 strike out of the money calls that don't expire for at least 6 months, maybe go a year out on that. If we can close the week Friday above 188.84, you can jump on that even more aggressively. 235 strike out of the money calls then expiring within, say, 6 months, because I consider that then to be a 2 to 3 month rally. But until then, once again, this is your zone, 184.25 to 188.84 on the weekly chart that can absorb buying into May trade. This is your profit-taking area if you've been long now, whether that's been for the last 2 to 3 weeks as we've been testing channel support, or whether you just got long on Tuesday when we closed above this 173.30 formation, because this was the go with buy signal on strength that should now yield 184.25 to 190.24 in as little as 3 to 5 days or sooner. I'm trying to think if there's anything else. Yeah, I'm going to talk downside now. If we happen to break or open below 173.30, 167.66 is attainable today. That's right about here on the chart. So that's not a stretch to consider the possibility of. And I will also say that if we close today back below 173.30, we should revisit the 160.82 long-term support area on the daily chart. Once again, on the weekly chart, you'll find it at 159.91. That area revisited within 3 to 5 days of closing back below 173.30. And so the last thing I'm going to say, and I don't see that by Friday's close, but you never know what may happen in the world. If we close this week Friday below 159.91, that is also below the 160.51 thus far double bottom. And if we do, then I'm anticipating 2 to 3 months bearish continuation back to the 101.81 January 23 low. And so if you bought those out of the money calls, whatever they may be, over the last few weeks, over the last couple of months, no good reason to hold on to them if we close the week Friday below 159.91. Until then, hold on to them. And certainly you might even add more if we close the week above 188.84. I'm going to leave it at that for Wednesday's Tesla. Please click like, share, subscribe. Check out wickedstocks.com. We put out a stock pick on Tuesday on Uber. You might want to check that out. I think that pretty much sums it up. I'll be back tomorrow with Thursday's Tesla. You have a great day.